Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at SPY on the daily weekly time frame to wrap up the week. Little bearish reversal doji at the top of the uptrend yesterday, and we did confirm it today, but the bulls are loving this consolidation because number one, it's very contained, small, tight ranges, and number two, we're seeing decreasing volume, which is exactly what the bulls want to see. If we do continue to consolidate, we have a gap here at 228.08, but as of right now, this looks like a bull flag, and a bull flag consolidation leads to continuation, which again would be exactly what the bulls want to see. So on the weekly time frame, we closed really strong. Nice continuation, all-time high this week, and we are about 0.3% away from an all-time high. So any even moderately bullish day to start next week, we're going to see a new all-time high. And again, if we don't, we'll look to see just further normal, healthy consolidation continue until the bulls are ready to show back up. So looking on the shorter-term time frames, a little lesson in perspective. You look at the 2-day hourly chart. If you were to just show me this chart by itself, I would say, okay, we're clearly in a downtrend, lower highs and lower lows. Bears are in control. And you zoom out, and it's a completely different picture. This is the 5-day chart. Okay, that's normal, healthy consolidation following an extremely strong bull move. So again, bull flag pattern is playing out on the hourly time frame, daily time frame. We're setting up for continuation for the bulls. So we'll need to regain the 20-period hourly moving average. We're looking down at support. Here's another nice example where previous support acted as support again. So let's go back to Wednesday. And Wednesday on the breakout, when we were looking towards the all-time high, we were watching a key level to maintain higher lows. So we saw a bull start to the day. We consolidated and formed support at 228.80. Then we formed a higher high and we pulled back, and we knew to maintain higher lows, we needed to hold 228.80. We bounced off 228.80, then we bounced off 228.84, a higher low, and then continued to higher highs and new all-time highs. Looking at today, very bearish start to the day. The bears were in full control. Again, not a huge dump when you look at the size of the candlestick on the daily time frame. But where did the bulls find support? Low of the day, 228.79. And that low of the day held for the next 4 hours. We did get another new low of the day by a couple more pennies here at the end of the day, 3 cents lower. But that support back from Wednesday, 228.80, holding again today. And I always give a couple pennies of wiggle room whenever we're in an instrument that's multiple hundreds of dollars. A couple of pennies doesn't really mean anything. So if something comes within a couple pennies, I'll call it a double bottom or a top. It doesn't have to be an exact to the penny number. So we're clearly holding that support that held on Wednesday, and we saw a little bit of bullish action at the end of the day. So the question will be on Monday, do we still see normal healthy consolidation? We'll be watching these supports, 228.76. If those levels hold and we stop forming lower lows on the daily the past couple of days, we will know the bulls are going to show back up. We'll be keeping an eye out because, like I said, we're just a flick of the wrist by the bulls away from a new all-time high. So we'll keep checking in as always. I hope you have a great weekend. Bulls still in control until we see conviction to the downside, which will be accompanied by volume. Volume will be the key, and until the bears get some volume behind this pullback, the bulls aren't scared at all. So thanks for watching. See you soon.